Hello everyone, welcome back in my accountancy class. Okay, so as we are already in our first chapter, that is accounting for not-for-profit organization, and in that chapter we have already discussed some of the theoretical aspects, and I think all of you have clear idea about this. And we have also solved as not-for-profit organization preparing two main accounts. One is receipts and payment account and another is income and expenditure account, and we have solved some of the questions regarding receipts and payments account. And now we are going to start our next account that is prepared by not-for-profit organization, that is income and expenditure account. Okay, so if we memorize the difference between income and expenditure account and receipts and payment account, we can find that the main difference between receipts and payment account and income and expenditure account is that receipts and payment account is prepared under cash basis of accounting, whereas the income and expenditure account is prepared under accrual basis of accounting. Okay, so what is difference between accrual basis of accounting and cash basis of accounting? I think all of you have idea about that, and if not, then I have already discussed what is cash basis of accounting and what is accrual basis of accounting. Okay, so before starting our income and expenditure account, I have solved some of the questions for two main important items of income and expenditure account. That is, one is subscription and another is salary. That is, we can say that subscription as the income for the not-for-profit organization, so it is the income for the not-for-profit organization, so it will be credited in the income and expenditure account. And whereas the salary is the payment that is made by the not-for-profit organization to any staff of that organization, so it is a payment for the organization, it is expenses for the organization, so it will come in the expenditure side. Okay, so in today's class, we are going to solve one question from income and expenditure account. Okay, and the question that we are going to solve is written on the board, and we are going to start it by taking a simple question from income and expenditure account. Okay, so students, write this question on your copy. Okay, so I think the question is visible to everyone. Okay, so take a note. So I am dictating the question. From the following items of receipts and payment account of South India Club. Okay, so before starting the question, you should know that the income and expenditure account is always prepared from receipts and payment account. Okay, so here the various items of receipts and payment account of South India Club is given, and from that we have to prepare an income and expenditure account for the year ended 31st March 2010. Okay, so as it is like receipts and payment account, we have to also prepare income and expenditure account at the end of the year. Okay, so what is the first item? Salaries paid. Okay, salaries paid rupees 55,000. Next, lighting expenses rupees 5,500. Okay, so what is lighting expenses? In simple sense, lighting expenses means electricity expenses. Next, stationery. There are some information in bracket. Okay, we'll take it later. What is the amount of stationery? Rupees 4,000. That means in that particular year, the receipts and payment account of that club shows that in that year the organization has paid rupees 4,000 for stationery. Okay, so out of this 4,000, there may be some items which is for previous accounting year, and there are some amount which may be they have paid in advance for the next future year. Okay, so similarly we have to find out what is the actual amount of stationery item that is made by the not-for-profit organization in a particular year. Okay, so in bracket it is written that including rupees 400. Okay, that means out of rupees 4,000 there are some inclusion of amount of rupees 400 for the previous year. Okay, so as income and expenditure account is prepared under accrual basis of accounting, that means in that account we will take those items, those expenses for the current accounting year. Okay, so if the rupees 4,000 is total amount and rupees 400 is paid for the previous year, that means in the previous year they have not paid for stationery items rupees 400. Okay, it was outstanding for the previous year. Okay, so it is the amount for the previous year, it is not for the current year. So in current year, the total amount they have purchased stationery worth rupees 4000 minus 400, because 400 is for the previous year. So if we deduct 4000 from the 400, if 400 from the 4000, then we will find that the actual amount of stationery items purchased by the not-for-profit organization. Remember, in income and expenditure account, what is the amount of income earned by the current accounting year, whether it is received or not received, will be taken into account. And in payment side, in expenditure side, what is the amount of money expenses by the not-for-profit organization, whether paid or not paid, we have to take that account. Okay, so it is called accrual basis of accounting. Next, subscription receipt amounted to rupees 44,000. Okay, so this is the actual amount of subscription received by the not-for-profit organization in the year 31st March in the year 2010. Okay, so if our accounting year closes on 31st March 2009, so we can say that it started on 10, you can say that it started on 1/4/2009. This is our actual accounting year. Okay, so in that accounting year, the organization has received subscription income from its member worth rupees 44,000. Okay, now we cannot say that this 44,000 amount is the income for that current accounting year. There may be some items, there may be some income for the previous year, there may be some income for the future year. Okay, so now we have to find out the adjustment regarding this. Okay, so the adjustment is written in the bracket, including rupees 1000. That means out of rupees 44,000, including rupees 1000 received in advance. Okay, so when one person pays subscription income for the current accounting year, that is for 2009-10, he also paid rupees 1000 for the next future year in advance. So now tell me, is it the income for the current accounting year? No, it is the income for the next financial year or next accounting year. So what should we do? We will simply deduct this amount from rupees 44,000 and rupees 750 for previous year. Okay, so if it is previous year for rupees, out of this amount there is an amount of rupees 750 which is the income for the previous year, so it is also not the income for the current accounting year. So what should we do? We will deduct this item from this amount. Okay, so this is the total amount of subscription received, 44,000 minus 1000, because it is paid in advance for the next financial year, so we have to deduct, and rupees 750 is for the previous year, so we have to deduct this item too. Then we will find the actual amount of subscription received. Next, net proceeds from refreshment-room, rupees 30,000. Okay, so just note it in your copy. I will discuss when I will give entry regarding this. Next, miscellaneous expenses, rupees 3,000. That means there are some small expenses or little expenses for which there is no specified account, so it is debited to miscellaneous account. Okay, so it is a miscellaneous expenditure, so it will come in the expenditure side. Interest paid on loan. Okay, that means the non-trading organization have taken a loan. Okay, so whenever we will take loan from bank, from other financial institutions, we have to give interest on it. Okay, so interest may be paid monthly, quarterly, half yearly and yearly. So where it is written that interest paid on loan for 3 months. Okay, that means for 3 months they have paid for interest. Okay, for 3 months, only 3 months they have paid interest. So we can say that the interest on loan will be paid on monthly basis, but they have paid interest only for 3 months. Okay, so as I have already told you that in income and expenditure account, what is the amount of money expenditure that is made by the non-trading organization, or expenses made by the non-trading organization in an accounting year, whether it is a paid or not paid, we'll have to take into account. So if they have paid interest only for 3 months, that means for other 9 months they have not paid. It will be paid in the next year, next financial year. So whenever we will pay it in the next financial year, it is not the payment for that year, it is the payment for the current year. So we have to adjust it in our current accounting year. So if interest on loan is paid for 3 months, rupees 1200. So for 1 month, the interest amount is rupees 1200 by 3. What is the amount? 400. Okay, so now we got the monthly amount of interest 400, and the for how many months for it is paid? It is paid for 3 months. So for 9 months we have to 8, because it is prepared under accrual basis of accounting. That means total amount of expenditure, whether it is paid or not paid, it will be taken into income and expenditure account. Next, rent and rates. Okay, so rent and rates means there are some the organization has taken a building or some other premises for which they have to pay rent or taxes. So the amount is 4,500. And in bracket, whatever we will find in bracket regarding these items, it is taken as adjustment. Okay, so what is including rupees 500 prepaid? Okay, so in the current accounting year, the organization has paid rupees 4,500 as rent and rates. Okay, so out of this 4,500, rupees 500 is paid in prepaid. So we can say that what is prepaid? Prepaid means advance. So if 4,500 is the total payment and rupees 500 is prepaid, that means for the next financial year advance. So we can say that in the current accounting year, the total amount of rent and rates is 4,000, because advance item is deducted and outstanding item will be added. Next, locker rent received rupees 4,900. Okay, so if the club, suppose the club has locker facility that I have already discussed in reception payment account, so they have given it on rent to some person and some members or non-members of the organization from which they have received rent. Okay, so it is the income for the not-for-profit organization, and in bracket it is not, there is no information. So the total amount of income from locker rent received is rupees 4,900. There are some other additional information. Okay, so what is the information? Subscriptions arrears. What is that? What do you mean? What do you mean by the term arrear? So arrear means outstanding. So subscription is outstanding as on 31st March 2010 or rupees 4,700. That means at the end of the current accounting year there is a subscription outstanding. So memorize that what we have done in our calculation of subscription income, that if subscription income is outstanding at the end of the year, it will be added. Because for for example, there are 5 members. Okay, in a non-trading organization there are 5 members and the subscription amount is rupees 20. So what is the actual amount? 100. And in the current accounting year only 4 members have paid, that is 80. So what is the subscription amount? 20. So is this 20 is not for the future year, not the income for the future year, it is the income for the current accounting year. So although it is not received by the non-trading organization, but it is the income for the current accounting year, so we have to add this amount with the total amount of subscription. And 9 months interest on loan, that we have find in that point, that only for 3 months have paid, so 9 months have outstanding. So 9 months interest on loan was also outstanding. So what we will do, outstanding items will be added and prepaid items will be deducted. Okay, so this is the question that I have explained. Okay, so let's start our solution. Okay, so similarly, receipts and income and expenditure account is draw like receipts and payment account. That is 2 sides. Debit, credit. So that what is the name of the account? Income and expenditure account. But expenditure comes first, that is in the left side. Expenditure, then income, debit, credit. In the books of the South India Club. Okay, next below we write what is the name of the account? Income and expenditure account. Okay, I am written in shortcut income and expenditure account for the year ended for the year ended 31st March 2010. Okay, so this is how we have to draw income and expenditure account. Okay, so if you memorize that what we have done in receipts and payment account, where all the receipts, whether it is a cash receipts or capital receipt, we have taken into account, and all the payments, whether it is a capital payment or cash payment, your revenue payments, we have taken into account. But in that account, we have to add some items, we have to deduct some items. So for our benefit, we are going to add another column. Okay, that is inner column and outer column, and final column amount. Okay, all the adjustment we will do in inner column, and the final amount will be taken into that column. Okay, so what is the first item? First item is salaries paid. Okay, so salaries paid, so we can say that it is the expenditure. So regarding this, we have to find any adjustment is given or not. Okay, so in additional information, there is no information regarding salaries paid, or in bracket there is nothing written about salaries paid. So the total amount of 55,000 means it is the salaries paid for the current accounting year, because regarding this there are no additional information. Okay, so it will come in the payment side. Two salaries paid. What is the amount? 55,000. Next, lighting expenses. So lighting expenses means electricity expenses. Now we have to check all the items in detail, because if there are any if there is any additional information is given or not. So regarding lighting expenses, is there any additional information? So in bracket there is nothing given, and in additional information there is no information regarding lighting expenses. So the total amount of 5,500 means it is for the expenses for the current accounting year. To lighting expenses, amount is 5,500. Okay, next, stationery. So stationery means pen, paper, pencil, marker, paperweight, calculator, etc. that is used by the not-for-profit organization. So whatever money is paid for this, it is the expenditure. So what is the actual amount of stationery? So first we have to write it in the expenditure side. Okay, to stationery. Okay, so now check, there in bracket there is one item that is including rupees 400 for the previous year. So it is an adjustment item, so we have to write the total amount in the bracket. What is the actual amount of stationery? 4,000. And in bracket it is written that including rupees 400 for the previous year. That means out of 4,400 for the previous year. So previous year, for in income and expenditure account, we will not take any item that is related to previous year and that is related to next financial year. So we have to deduct that item. Less paid for previous year. Okay, previous year 400. So what is the actual money payment for the current year? 3,600. Next, subscription receipts. So subscription is an income, so it will come in the payments, income side, by subscriptions. Okay, so we will take it in the inner column because there are some adjustment. What is the actual amount? 44,000. So what is the first information regarding subscription? Including rupees 1,000 received in advance. That means in current accounting year, in 2009-10, while receiving the subscription income, some of the members have paid subscription for the next financial year also. And what is that amount? That amount is rupees 1,000. So now tell me, is it the income for the current accounting year? No, because it is the income related to the next financial year, so we have to deduct that item. Less advance subscription. 1,000. Okay, 43,000. Okay, there are some other adjustments, so I have written it in the inner column. What is the next item? And rupees 750 for the previous year. So in income and expenditure account, we will not take any item for the previous year and for the next financial year. So this item we have to deduct rupees 750 for the previous year. Received for previous year. What is the amount? 750. Okay, so now check, is there any information regarding subscription? In additional information, we find subscription in arrears for 31st March 2010. That means current year's outstanding. So whenever this outstanding amount will be paid, it will not be the income for the next financial year. It is the income for the current accounting year. So we have to record it in the current accounting year. So we have to add that item. Add outstanding. Arrears mean outstanding. Outstanding as on 31st March 2010. Okay, 42,250 plus 4,700. So what is the amount? The amount is 46,950 is the total amount of subscription income for the current accounting year. Next one is the net proceeds from refreshment room. Okay, so that I have not discussed in the question. What is refreshment room? In not-for-profit organization, that is for club, so taking the example of club, there are some there may be auditorium, there may be ground for sports ground. Okay, sports ground, conference hall, meeting hall, etc. Okay, these are the that means there may be for non-trading organization, for club, there are facility for auditorium, sports ground, conference or meeting hall, etc., which they given on rent. Similarly, there is refreshment room. Okay, refreshment room. Okay, so what is refreshment room? In simple term, refreshment room means a hall where there may be a meeting. Okay, there may be for marriage ceremony. Okay, any other cultural function. Okay, for which they have given it on rent, and from this rent, they have received certain amount as rent. Okay, so this is called net proceeds from refreshment room. That means the club have refreshment room or conference hall or auditorium which they given on rent, and from this they have received income which is called proceeds. Whatever we have received from any other person, this amount is called proceeds, and the net proceeds from that amount from that refreshment room is amounted to rupees 30,000. That means in refreshment room, while giving them on rent, they have expenses. There is some expenses like 5,000, and the total amount they have received on rent 35,000. Okay, so if 35,000 is received from is the rent received from that auditorium or refreshment room, and the 5,000 is expenditure, then what is the net amount from that net amount of income from this 35,000 minus 5,000? So the total amount of income from net refreshment room is rupees 30,000. So it will come in the payment side, and we write it as by net proceeds. Net proceeds. What is net proceeds? Net proceeds means after deduction all the expenses, what is the actual amount of income? Net proceeds of refreshment room. Refreshment room, amount of rupees 30,000. Okay, so example, the club has given is hall for conducting cultural festival, and from which they have received rent, and the amount is rupees 30,000. So it will come in the income side. Next, miscellaneous expenses. So it is the expenditure to miscellaneous expenses. Miscellaneous expenses rupees 3,000. Miscellaneous expenses rupees 3000. Miscellaneous expenses is rupees 3000. Okay, so please check that in question what I am written, whether it is 400 or 3000. If 400, then the actual amount is rupees 3000. Next, interest paid on loan. So it will come in the expenditure side to interest on loan. To interest on loan. What is the amount? 1200. Why I have written it on the inner column? Because whenever they will pay the interest on loan, it will be paid for the whole year. But in the current year, they have only paid for 3 months. But what is the amount for the next 9 years? For next 9 years, it will be paid on the next financial year. But now tell me, for which year this? For which year? This is the expenditure for which year? The expenditure is for the current accounting year, so we have to record it in the current accounting year. So what is the amount they have paid interest on loan? Rupees 1200 only for 3 months. Now we have to add outstanding for another 9 months. Add outstanding for 9 months. Now how you will find the amount? Just rupees 1200 for 4 months divided by 4 into 9. What is the amount? 3600. Okay, now 3600. Okay, so for 12 divided by 3 rupees 1200 is paid for 3 months, so 1200 divided by 3, 3 by 9, 3, 1200, 3600. So what will be the actual amount of interest loan for the current accounting year? 1200 plus 3600, rupees 4800. Because this is the actual basis of accounting, that means whatever the expenditure we have incurred, whether it is paid or not paid, we have to record it in our account. So in that question, it is paid only for the 3 months, but for 9 months we will not pay it. It is the outstanding amount, so we have to record it in the income and expenditure account, because it is the expenditure for the current accounting year. Okay, what is the next item? Rent and rates. Okay, so it is also an expenditure, so it will come in the payment side. To rent and rates. What is the amount? Rupees 4500. So in bracket there is some information, so it is an adjustment. So all the adjustment items will be written in the inner column. And what is the adjustment? Rupees 500 prepaid. Okay, so out of rupees 4500, 500 rupees is paid for prepaid or advance. So it is not the expenditure for the current accounting year, it is the expenditure for the next accounting year. So from this amount we have to deduct this, because it is not the expenditure for the current accounting year, it is the expenditure for the next accounting year, but the payment is made in the current accounting year. So we have to deduct that item. Less prepaid rent. Prepaid rent. What is the amount? 500. So what is the actual amount of rent and rates for the current accounting year? Is rupees 4000. Next, local rent receipt. That means club has local facility which is given on rent, and so the income it is local rent receipt. Local rent receipt, and the amount is rupees 4900. 4900. Okay, so we have entered all the items in our income and expenditure account. Whether we have taken additional information, that is subscription, we have already adjusted, and interest on 9 months was also outstanding, that we have already adjusted in interest on loan, because we have to add this item because it is the interest for the current accounting year. Okay, now we have to balance. Okay, so first we will balance the expenditure side. 61,500, 55,000, 55, 60,500. Okay, 60,500. After adding these two, 6,600, 6,600, 8,800. Okay, 8,800. 0, 0, 5, 6, 11, 9, 1 in hand, 6, 8, 14 plus 1, 15, 1, 7. 75,900 is in the expenditure side. Now in the income side, 46,950 are 34,900. 34,900. Okay, 0, 5, 18, 1, 6, 4, 10, 1, 11, 1, 48. 81,850. Okay, so we can say that income side is more than expenditure side. Okay, so now we have to put the high amount in both the side. 81, 850, and in the expenditure side we have to write the larger amount, 81,850. And what is the difference? 81,75,900. 0, 0, sorry, 0, 5, 5, 89, 9, 0, 0, 10, 5, 5, 5, 9, 5, 0. Okay, so it is the difference in the expenditure side. Okay, so now the difference between the result of income and expenditure account is either surplus or deficit. If income side is more than expenditure, then whatever the balance, it is surplus, that means profit. Okay, so now in that question, income side is more than expenditure side, and what is the balance? 5950, so it is the surplus. To surplus in bracket we write excess of income over expenditure. Okay, so this is the solution for the current problem. Okay, so if any question or confusion, then you can contact me and try if any confusion, then watch this video properly, and in our next class we will solve another solution from income and expenditure account. Okay, so thank you.